Good morning, everyone. Welcome to Office Adda 24/7. My name is Niharika Walia Bhatnagar, and I am with you with the area of JAIIB. Okay, so today we are going to talk about AFM 2023. Acha, now we are looking at 2024 as well. So if I have to look forward to it, it is 2024 now. Okay, so let's talk about it. We were talking about the basics of accounting. The basics was chapter number 1 or unit number 1, module A. So let's look at the question that we are having today. We're doing the basics of accounting. In terms of basics of accounting, we are done with what do you mean by accounting, bookkeeping, accountancy, right? The limitations of accounting. We were done with all that area. Now I'm talking about different types of accounting today. That is value accounting and fair value accounting. Okay, now let's talk about value and fair value difference. Uh, Value accounting is referring to, what do you mean by the term value in our lives? If I say that what is the value of this thing, that means how important that particular thing is for you, right? That is something which we define as value accounting. One thing is value accounting and one thing is first is value and second is fair value. Okay, the difference is just of one word, fair. It is actually related to the area of fair value is market value, the value of the particular thing in the market right now. And value accounting is based upon the area of value accounting is based upon the area of the contribution towards a thing. For example, if I say that in terms of the working that we are doing, okay, we were making a particular project. In that project, this person is given 10 hours, this person is given 20 hours, this person is given 30 hours, there was someone who had given 50 hours. So the contribution towards this area is the value. Fair value would be the what is the value of the entire project in the market right now. That is fair value accounting. So both are in terms of I would say both are in terms of quantity, because in accounting it's all about the money. So anything which can be quantified in terms of money would be recorded. So that is what we will consider in this area. So we are talking about basics of accounting. Achha, now the point is, what is the primary purpose of the value accounting in evaluating product contributions? First is tracking market conditions. Second is assigning a percentage to each contributor. Then is identifying tangible assets or determining current market value. They're talking about value accounting. What is it that we are looking at? See, value accounting is towards contributions. है ना? One thing is sorted about it. So value accounting in evaluating product contributions. So we're going to look how people are working on it. It's not about the organization there. It is not about the money that we are putting in. It is about the efforts which are being put in terms of monetary value. So the correct answer would be assigning a percentage to each contributor. Okay? The answer would be B. Okay, next point. What does fair value accounting consider when determining the value of the assets and liabilities? Historical cost. Historical cost is the cost at which we purchase the particular thing. For example, I bought my phone in, say, March. I bought it for, say, 65,000. That is the historical cost. Okay? This is historical cost. Now, the present value of this phone may be up or down depending upon if new models have been added. Now, the value of this is around 50,000. Okay. Now, this is the value of the phone right now. That is, this is the current market value. Intrinsic value of the holder, intrinsic value is the value which they will find out in their internal level, not at the external level. And potential future value, for example, now new models would be added, the year is about to end, that means in the next year new models will come up, so I can say the next year's price would be around 45,000. So according to you, which one would be the value, fair value that they're talking about? Remember, we just talked about it. All these are market values only, but which market value is to be chosen is the question, right? Okay, which market value to be chosen has to be decided. The amount that you have to choose is current market value. It's the answer. Chaliye, let's continue further. Why does the fair value accounting face challenges and limited acceptance? Um, the answer was market value, right? Market value of the goods is basically what? The current market value. That is, if I have to choose, is the current market value is of 50,000? What's the problem in choosing this? Let's talk about that part as well. I know the value of my goods changes every single month or every single year. It is going to change. You know, this part is sorted, everyone. There is going to be a change every single month or every single day, even. For example, the value of anything will change during the day itself. You are thinking about the value, and with the snap of a finger, the value would be changing. You know? Okay, so let's continue further. In this era, the point is increased cost and delays. Second is wide availability of reliable information, accuracy of available information, or minimum concerns about current market conditions. Now, we were talking about the fair value accounting faces challenges. Acha, in terms of fair value, I want to know the market value of the things. है ना? So when we are trying to looking at the market value situation, how do we record it would be the point. So, in this case, look at the question and let me know the answer. Okay. When we talk about this area, fair value accounting faces challenges and limited acceptance. The limited acceptance is because of increased cost and delays. Now, let me tell you the reason behind it as well. See, when we talk about fair value accounting facing challenges, the point is I prepare the books of accounts from 1st of April to 31st of March, right? So every single day, if the market value of the goods is changing after a few days, you will see a change in demand. You know? So if there would be a change in demand, change in pattern, so there is one problem. By the end of the day, how will you find it out? So in terms of the 1st of April to 31st of March, there is a change occurring in this area. So that is because we are looking forward to increased cost and delays that will occur because every single day tracing is not possible. That is possible, agreed, but to what extent we cannot write down the differences for the 365 days in the year, right? So though a part of it is there in terms of ind as is right now considering the fluctuations, but not every single day because that would be too costly, right? So let's look at the next question. Acha, this is who is credited with the publishing book Suma in 1494 AD. This is actually AD, everyone. In 1494 AD, which contained the section on double entry bookkeeping. So, double entry bookkeeping that we study today was found in 1494 AD. This was given in 1494 AD. Is it given by King Chandragupta. वैसे तो if I talk about it, there was a particular person under King Chandragupta. There was the name was Kautilya, or also known as Chanakya. He is known as the person who's the founder of accountancy in our country, and it happened, I think, more than 2500 years ago. So basically, in 1494 AD, what they found was basically something Indians knew about more than 2500 years ago. So one thing is there with the hint A and C is out, right? Babylonians were also very much into this. Egyptians, Babylonians also had some roots of accountancy back in their architectural designs and in their proofs that we got from the historical areas. So this was also there. But the person who gave the latest accounting that we follow, it came hardly 500 years ago. That is by Luca de Bargo Peccioli. He's also known as Luca Bartolomus Peccioli, also known as Friar Luca and Luca Peccioli. There are different names that you will find. Lucas Peccioli is also one of his names. So you will find different names in different books. But in our book, that is IIBF book, you will find it as Luca de Bargo Peccioli. So this is the person who introduced it in 1494 AD. That is 1494 AD. And he called it double entry bookkeeping. That means for everything there's a cost. For example, matlab, you are receiver and a giver at the same time. If I buy a pack of chips, I am paying for it. If I buy a car, I am paying for it. If I'm selling a car, I'm getting money and I'm losing the car. Right? There is at one point of time you will be the receiver, at the same time you will be a giver as well. So based upon this scenario, the double entry bookkeeping was made. So this was given by Luca de Bargo Peccioli. He was an Italian monk, published the book Summa in 1494 AD, which included the section of double entry bookkeeping. While if I talk about Kautilya or Chanakya had given the book named Arthashastra, which has our roots in India. Okay. So that's about this. Now comes the next point. What ancient Indian method of accounting is still in use, also known as Mahajani, Marwari, or Deshi method? Double entry, Nama, Arthashastra, and Summa. Soma, you already know that's the name of the book which is given by Luca Peccioli. So that is something that I'm eliminating. Arthashastra is something which is given by Kautilya or Chanakya. So this can be a part of it. Double entry method is definitely not the name because why? Double entry is something which is given by Luca Peccioli. So that means these are all out. We are left with B and C, everyone. Nama or Arthashastra. In this case, the correct answer is Nama method. This is the method which is still followed, or the names are Mahajani, Marwari, Deshi, as well as Nama. Okay? These are the various names in which the method which is still prevalent in India. But though if I talk about the maintenance of books, none of these methods are used in terms of income tax department there, because ultimately the books are prepared either as per Companies Act 2013 or as per Income Tax Act 1961. So we are following these two areas in terms of maintenance of the books of accounts, though the maintenance of the books of accounts are also required, but related to only stock purchase and sale when it comes to GST as well. So different acts require maintenance of books in a different manner. So the Nama method is definitely not given in any of those books. Acha, next point. What does the term book value represent in the context of the cost concept? Market value of assets, present value, original purchase, or future value of the assets? What does the term book value in terms of cost concept? Acha, cost concept says I bought something. I bought something today for rupees 10,000. This is something that I've bought today that is of rupees 10,000. Now, I paid 500 rupees for its installation. Without the installation, I could not use this machinery. So I have totally spent 10,500 for this machinery to make it ready to use. The concept says the thing is ready to use. Till the time the particular thing is not ready to use, Whatever money you are spending on it, it's a part of that asset. So what do we get under the cost concept? The market value, the present value, or original purchase price, or future value. We have just talked about it. The answer is original purchase price. Whatever money we actually spent on buying that thing. The term book value represents the original purchase price of the assets, and assets are recorded on their original cost under the cost concept. Done? Next, which accounting concept states that every business transaction is recorded at the cost price irrespective of the market price? Entity, cost, money measurement, and dual aspect concept. Acha, which accounting concept states that every business transaction is recorded at cost price? Matlab, there are multiple concepts na. So this particular concept says everything should be recorded at cost. It doesn't matter what is the market value today. The price, for example, I bought a piece of land in 1980. So if I bought a piece of land in 1980, then what is the value of that particular land today? If I revalue it, maybe the what I bought for 5,000 rupees at that point of time, today it would be in crores, right? The land scarcity has definitely affected that part. So in that case, entity concept is being used, cost concept is being used, money measurement, or dual aspect. We do not record things at market price. We are going to record things at cost. We cannot record it any other manner. Okay, this is historical cost concept or cost concept. Okay, here comes the next question. I hope it is visible properly in case. Chaliye. The question says, what is the main argument in favor of the cost concept in accounting, even when there are wide differences in between the cost and the market value of the assets? What is the main thing? Why do we record things at the cost while the things definitely change? Now, I bought the particular land in 1980 for 4,000 or 5,000 merely. Why are we still recording the things at that prices? Why? Adjusting the cost to market value increases objectivity. Cost concept meets the criteria of relevance, objectivity, and feasibility. Or cost concept ensures accurate market valuation, or market value is more reliable measure of an asset's net worth. No, this is not the point. Market value is never a better point because it keeps on fluctuating. Dynamic part never brings stability. Cost concept, that means the cost concept ensures accurate market valuation. No, not really. But when we talk about the cost concept meets the criteria for relevance, objectivity, and feasibility, that's true. This is absolutely true because you are recording the things at the ground reality, at what price you paid for that particular thing. You're not going to do this or that in terms of the working. You're going to be very clear about the price at which you are actually buying it. Okay, here comes the next point. The next point says, what does the term business entity concept emphasizes? That means, is it what does the term business entity concept emphasize in accounting? Blurring the distinction between the business and the owner, treating the capital contributed by the owner as an asset for the business, separating the entity of the proprietor from the transactions, combining the financial records of the business and the owner. What is it? What does the business entity concept emphasize? What is that particular thing the business entity concept is focusing on? Business entity concept. It states that the business and the businessman are two different things. The point is business and businessman. both are two different areas. That means in this case, they have separate, whatever businessman is doing is separate from the business. He adds money, it's separate. He takes money out of the business, it's separate. He adds something, separate. He does something for his personal money, it's separate. Whatever the business is doing is completely different from that. So in this case, the correct answer would be separating the proprietor from the business transactions. If I am A and my business is A and Sons, okay, A and Company, A and Sons, whatever you feel like. Now in this case, A has put money in A and Sons. This is the money that he is putting is called capital. The money when withdrawn from the books of accounts for his personal use. The person said that I would like to buy a house. So for that, whatever money I've invested in the business, I've invested 50 lakhs. So I would like to withdraw 20 lakhs for the moment. Once the particular loan arrangement would be there, I will give the money back to the business. So in this case, he is making drawings from the business. Okay, na? He's making a drawings. So both of these terminologies, capital and drawings, come out because A and company are two separate things. Okay. Now comes the next point. How is the profit treated under business entity concept? Profit is considered as an asset, a liability, or separately treated as drawings, or profit is recorded as an increase in the owner's capital. How is profit treated under the business entity concept? Business entity concept says whatever money the businessman is putting into the business, it's the responsibility of the business to help the businessman. Okay. So he's actually profit is considered as an asset. No, because this money doesn't belong to the business. This money solely and totally belongs to the businessman. It is a liability. It's a burden on the head of the business. Ki, arey, whatever money the businessman has given to the business, this should be used accordingly. So profit is considered as a liability. The answer is profit is considered as a liability. Under the business entity concept, profit is considered as a liability, while loss is considered as an asset. Good morning, everyone. Welcome to Officer 24/7. My name is Niharika Walia Bhatnagar, and I am with you with the era of JIB, Accounting and Financial Management for Bankers. So today we are going to talk about the basic accountancy. Basics of accountancy. We had started with this series. You must have seen a lot of classes have already been done. Overall, I think 4 or 5 classes are already done in this particular series. Along with this, recently have just covered the unlocking secrets of this particular examination syllabus. So kindly go ahead and check it out because there are certain chapters that I've highlighted which are more important as compared to others. Overall, if I talk about the JIB examination now, one thing is clear. They are covering the entire syllabus. So if someone says that leave this particular chapter, leave that particular chapter, that means you are leaving 4 marks, 5 marks, depending upon the weightage of that particular chapter or a particular unit. Overall, there are 35 units in this particular examination divided over the span of 4 specific modules. So it's way better when you're going for this examination, you are absolutely clear about what particular method you're going to choose for your approach regarding your preparation. Right? So let's proceed and continue with the topic that we were discussing in the last class. Acha, we were talking about the various concepts now. So let's talk about these concepts. Chaliye. We were talking about the basic accountancy procedure. Okay, here comes the first question, everyone. The first question talks about The first question talks about the convention of conservatism. Conservatism means what? Every business is scared. Why is business scared? The business is scared about the fact that what if they face a loss? How does the convention of conservatism influence the valuation of assets in accounting? Conservatism means anticipate the losses but not profits. Always remember, we are going to talk about prudence or conservatism in this way only. Do not think that the organization will arrange its funds when the losses will come, and let's live with the profits that we are having. The fact is, if in the future the losses are yet to come, it's better that we prepare accordingly for that. First of all, it says assets are always valued at the market value. That is somewhere not true, because when we talk about assets, they are normally recorded at historical costs. Did that particular concept with you? Now comes the next concept, that is anticipated profits are considered in asset valuation. Then the next is assets are valued at higher of cost or market value. Next is possible losses are considered and assets may be valued at the lower of cost or market value. The first point, as I said, market value should not be considered because, see, I'm using my phone, right? I'm using my phone every single day. Do I look at my phone and say, ki today my phone is for 20,000, next day 30,000? Acha, nahi. Overall, I think I would have bought my phone for 50,000. So right now its value would be 45,000. No, you do not talk about your phone's price every single day. You will talk about the selling price of it the day you are selling this to someone. Until or unless you are not selling, you are not going to talk about the market value. We all are using cars. We do not talk about the market value of it every single day. We will discuss ki acha, I think I'm going to sell my car. What would be the price that would be available to me right now? That is the market value, the day you are departing from that particular asset. So anticipated profits are considered in asset valuation. That's wrong again. How can we anticipate the profits in advance and start parting about it? Ki, "Arey, we are going to receive profit in any case." What if an uncertainty happens? How can we remove that particular fact altogether? Assets are valued at higher of cost and market value. Again, we are recording the profits which is nowhere in the vicinity. At least in front of you, right now, there is no vicinity. So this should not be recorded. You should be recording the books of accounts so that you are not misleading the people. Then D says possible losses are considered and the assets may be valued at lower of the cost or market value. In this case, the correct answer is actually D. Possible losses are considered and assets may be valued at the lower of cost or market value. Here comes the next question. The next question talks about, according to the convention of consistency, what is the requirement when a company decides to change its method for recording and reporting purposes? See, convention of consistency talks about the fact that, देखिए, if there is any change, if in case there is any change in the books of accounts, be very clear about it. There is no harm in changing the methods, but you should be consistent. Matlab, if you're using method A now, then continue with method A. If you're using method B, then continue with method B. If you want to change, then you should be very clear which particular method you are moving on to, and then you stabilize even. It should not happen that you are changing it again, time and again, right? So that is another point. In this case, it is talking about that according to the convention of consistency. Acha, what is the difference between principles and conventions? See, conventions are basically the practices which are being done in the business traditions, or you can say in that particular form of business. Now, what is exactly a trend, or you can say the method which is inherited from other people or your ancestors in terms of working in that business. They say, what do you mean by consistency? They say, this is something which everybody does in the market. So even we are going to continue. So consistency is a convention, some kind of tradition which is followed by everyone. So consistency is something which is more or less adapted by every organization. And those which do not adapt consistency faces a few problems. For example, if you are using method A and move towards method B, and you do it without doing any homework. You said, no, 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 let's just shift towards module B. Let's just switch it. And the organization faced problems when they switched to method B. Now they are regretting and they want to go to method A again. Now this is done over a span of 3 years. Now there's one problem. Method A was done in year 1, then year 2, and year 3. Year 1 and 2 are not comparable. You cannot compare CBSE with ICSE. And then again, when you are moving from ICSE to CBSE in terms of your studies, you are still not comparable. So these 3 years are totally uncomparable. You cannot draw or any kind of trend out of it. No trends are possible, right? What is the requirement when a company decides to change its method for recording and reporting purposes? Change methods without any disclosure, that would be a sin. How can you just change the things and not tell the shareholders about it? Change but continue without any impact. Matlab, again, if there is no impact being shown in the books of accounts, your books of accounts are wrong. Clearly state the impact of the change and continue with the new method, or change methods without any need for justification. There is a need for justification why you are shifting, and if you want to shift back, then you should state the reason again. And in this case, you have to specify what impact did it bring. What happens is, maybe moving from A to B had given you some wrong profit shown just because you are changing the method, so your profit goes from here to here, and it is not because you are selling more or your company has become more efficient. No, it's because of change in method. So in this case, you are misleading the shareholder, so you have to lead them properly. You have to tell them the impact of this is because of we are changing the methods that we can see more of profits. So that's model that's about the consistency concept, right? Done, everyone. Now comes the next point. That is, it clearly states the impact of the change and continue with the new method. Next point. What is the term going concern concept assume about a business entity? The business intends to liquidate into the near future. The business is formed for specific short-term project. The business will continue to operate for a long period unless there is an evidence of the contrary, or the evidence will only operate for the duration of its current projects. When we talk about going concern can be easily explained in a rhythmic format. Men may come and men may go, but the company or the organization is here to stay. We do not use the word forever because there is nothing forever, right? So in this case, going concern simply means that we do not believe that the organization is going to end tomorrow and we should be doing all the things accordingly. No. Every single day, whatever assets are there, it is again there in the next day as well. So on 31st of March, when we are closing the books, the opening of 1st April books is also done. We know that the next morning we are going to come up, new financial year is going to start. For that, we have to already prepare our books. We have to carry forward the same. This is what we strongly believe in. For example, you don't know and I don't know whether I'll wake up early in the morning or not. Nobody knows. But the point is, I'll still keep this particular t-shirt and my equipments at the same place, and in the morning I'll come up and pick up and do the same work. So this means even though you don't know whether the organization will survive until or unless there is some problem going on, it is assumed that the organization is here to stay. And if the evidence is available, then the full disclosure principle states ki, array, always remember, if your company is facing any problem or if there is any issue that is basically going to affect its going concern, it should be reported. The business will continue to operate for a long time unless there is an evidence to the contrary. I'm sorry. Then comes the area of why is the assumption of going concern important in accounting? Why is it so important? It emphasizes on the importance of liquidation values. It simplifies the depreciation procedure. It establishes the basis of valuation and allocation in accounting, or it relies on higher current market values for the asset reporting. Why is it so important? What can be the reason behind it, everyone? Basically, now when we talk about going concern, the IIBF book talks about the importance of depreciation. Acha, everyone, I strongly believe my business is here to stay. In the name of the business, I bought a car, and the car is bought for 15 years. The registration is normally for 15 years. So I'm going to talk to you and say that my car is for 15 lakh rupees. And I believe it would depreciate over a time span of 15 years. It's going to be rupees 1 lakh, right? The amount is going to be rupees 1 lakh. So in this case, what are we going to do? We say that every single year, the first year, it's going to be of 1 lakh. Second year, again, it's going to be of 1 lakh. Third year, it's again going to be of 1 lakh rupees. So we are going to continue with this 1 lakh rupees over a span of time. So that means in this case, what is the assumption of going concern assumption? It says we can allocate the expense over the time span, because I strongly believe my business is going to outlive the life of the asset. They said how much years the business is going to stay. Business is here only. So they said, okay, if the business is here, if you have bought the car, do not allocate the entire amount in the first year itself. If you have more than 15 years, divide it among the next 15 years. So it basically establishes the basis for valuation and allocation in accounting. Next point, what is the key advantage in terms of the double entry system in record keeping? Time efficiency, complete record of business transactions, economic savings, or limited information recording. What is the key advantage of double entry system, everyone? Double entry bookkeeping says whatever you get. There are two parts of this kind of transaction. If I buy this pen, I would have paid for it as well. If I would have got the phone, then I've got a phone and I've paid for it. If I've got a mouse, then if this mouse is with me, I would have paid for it. You know? So technically, for everything that you receive or everything that you sell, you have another part of the transaction. For example, if I buy a pack of chips, I get a pack of chips and I pay. And if I sell this mouse to someone, this mouse is gone and I'll still receive money. So technically, every transaction, you are a giver as well as a receiver. Either you will receive goods or either you will receive money. Or either you'll receive asset, either you'll receive money. Whatever we are doing, there are always two aspects of it. So technically, double entry bookkeeping is a system of accounting which is complete record of business transaction. Right? Next point. Which principle is also known as the convention of prudence? We have just done it. Convention of neutrality, the principle of consistency, principle of conservatism, or convention of reliability. The conventions are also sometimes called the principle. They are used in terms of interchangeable terms a lot. When we talk about prudence, the other name for prudence is conservatism. When we talk about prudence or conservatism, it says anticipate the losses but not profits. That is principle of conservatism. What does the principle of conservatism suggest regarding the recognition of revenues? When does it record the revenue? Recognize it immediately or recognize them only when you receive the money? Recognize them after a specific period of time or ignore the recognition? You just cannot ignore the recognition. Because if you're going to see, if I'm going to receive money from Mr. R and I do not record it, will I remember it after a certain period of time? I will forget it altogether from whom I had to get money, what amount of money I had to get. So that's the point. So, what does the principle of conservatism suggest regarding the recognition of revenue? It basically suggests that recognize them only when you receive in cash or in assets. For example, if I sold a good to Mr. A, I am B, and I sold them goods. And I sold goods to C as well. This is C, and I sold goods. A said, I am making the payment in cash. Okay, so I can record this transaction. C said that I am buying it on credit. Maybe I can pay you tomorrow or day after tomorrow. Now, this is a credit transaction. So, you can record both cash or credit transaction. If the person says that they owe me money, they will pay us money, they are called debtors. C is my debtor. Done, everyone? This is how we define the term debtor. Chaliye. Now let's move on and talk about the answer. The answer is recognize them only when the assets are realized in cash. Done, everyone? Chaliye. Let's continue it further. Next question. What does the principle of conservatism suggest regarding the recognition? Recognize them. Acha, we are done with this question already. It's a repetition only. Next question. What is the primary outcome of applying the principle of conservatism to financial statements? Net assets and income are likely to be overstated. Liabilities and expenses are to be understated. Net assets and income are likely to be understated, or liabilities and expenses are to be overstated. Conservatism will definitely make sure that incomes and assets are never overstated, right? We will not record the things that someday we will receive this much amount of money, maybe we will receive this much amount of money in future. They do not live in future, they live in present. So in this case they will say what is the final money that you believe it would be received for sure. So you will record only the things at their lowest level. That is, the assets and incomes are always understated. For example, in terms of stock, the goods that are saleable, it is cost or net realizable value, whichever is less. This is also covered in AS2, that is valuation of inventories. Okay, so this is about stock. I think in AS2 is also in valuation of inventories. So this way they talk about conservatism as if the cost is 10 rupees and if you go and sell it in the market currently, for some reason the demand has been hit. So in the market it is, we bought it for 10 rupees, but right now in the market if I try to sell it, I will just get 8 rupees for it. It would be 10 or 8, whichever is less. Come to reality. If the value is going to be less, record the lower value. Net assets and income are likely to be understated. They are to be understated as per the question. Okay? So this is about this entire area of net assets and incomes are likely to be understated. Okay, so that's it for the day, everyone. Okay, let's go for one more question. What is the primary outcome of applying the principle of conservatism to financial statements? Acha, this is the same question. Just happened to be a repetition. Net assets and incomes are likely to be understated. This is what we did now. Because and we are preparing for May 2024, everyone. Okay, so let's talk about the basic accountancy that we were talking about in our previous classes. This series has been started just recently. That means this is in context with the May 2024. If you haven't looked at our courses yet, then kindly check it out. My batch has just started for the May 2024 attempt. So if you haven't reviewed it yet, then kindly check it out. You can look forward to our classes in our app or on our website. At this point of time, sometimes the sale is also going on. When I think currently we are having a sale going on as well. Check it out on our app first, because in app you get another 1% discount. So all these little hacks will definitely be helpful when you're thinking to buy any of our courses. So let's check it out further. By the end of the class, I'll show you where to go when you're looking forward to our JIB courses. Till then, let's start with our accounting and financial management class. Acha, everyone, we were talking about the basics of accountancy, the basic accountancy procedure. We were talking about the chapter unit number 2, combined with a part of unit number 1 as well. I think I'll be covering it today. So let's start it, everyone. Here comes the first question. It says, what is the primary outcome of applying the principle of conservatism to financial statements? Acha, when we talk about conservatism, na conservatism means anticipate the losses but not profits. Matlab, conservatism is also known as prudence. And prudence is that you should be ready for your losses, but you should not be thinking about the profits that are yet to come. That means till the time you don't receive the profits in your hand, do not think of it. Anticipate the losses, but not profits. That's the ideology behind the topic of conservatism. So they want to make sure that we are always ready for the losses, but we are not noting down something which we haven't even received at all yet. So in this case, net assets and income are likely to be overstated. Then liabilities and expenses are likely to be understated. Net assets and income are likely to be understated, or liabilities and expenses are likely to be overstated. The truth is, they're always ready for the liabilities. But in terms of their assets, they are never going to record it at its true value, because we know that someday we can have problems, so we can record it on the basis of the problem itself. So we are going to note down incomes and assets only at the materially stated area. That means we are likely to be noted in terms of the understated area only. Net assets, the current value, and that to the least value would be taken. Income, only the one which is completely certain would be recorded. That means we are not recording anything which is going to happen in future and is not certain yet. Okay, so in this case the correct answer is C. That is, the net assets and income are likely to be understated. Next question. The accounting standards are statements prescribed by. First is central government, Institute of Chartered Accountants of India, SEBI, or the Institute of Cost Accountants of India. When we talk about the accounting standards as prescribed, the accounting standards are given by ICAI, the Institute of Chartered Accountants of India. So in this case, the correct answer is D. No, it's B. Chaliye. Now, let's move on. The answer is the Institute of Chartered Accountants of India. Now comes the next question. Which type of the following is or are the main principles of double entry system? When we talk about the double entry system of bookkeeping, it says that every business transaction has two aspects, one of receiving and benefit and one is giving. For every transaction, two parties must be interested. The twofold effect of the business transaction is recorded by debiting one account and credited the other account at the same time, or all of the above. All of these are basically very important when we talk about the double entry system. The double entry system clearly states that, first of all, in every journal entry, you will have multiple points. First of all, in every business transaction that we are recording, it's going to be based upon there is a one person is the receiver and one person is the giver. For example, if I sell my goods, I am a receiver and a giver at the same time. When I'm selling goods, I'm getting cash. You know, when I am selling goods and getting cash, that is basically something that you and I can define as every business transaction has two aspects. Second point, there is 2 points. One is debit and one is credit. The system of double entry bookkeeping was given by Luca Bartolomeo de Piccoli. So basically, the particular person said that divide the particular format of accounting in two different sides. One is called the debit side, the other is called the credit side. The twofold effect of a business transaction is recorded. That means a few things would be given on the debit side, a few on the credit side. But it is based upon the concept of LHS is equal to RHS. So in this case, the correct answer is all of the above. Done? What is the need to bring the standardization in accounting principles? To bring in consistency, to ensure transparency, to be comparable, or all of the above? What is the need to bring in standardization? When we are trying to bring standardization, now standardization means uniformity. We are bringing uniformity throughout the area regarding the rules. Right? So this is to bring consistency, to bring transparency, comparable, or all of the above. The correct answer is all of the above. Then comes the area of the going concern concept. The profits of the firm are enough to sustain its operations. In terms of going concern concept, this is one of the basic assumptions which is existing in the area of accounting. Rather, it's the base of accounting. So the question says the profits of the firm are enough to sustain its operations. The owner of the firm are different than the firm. The firm will be continuing the operation at least in the near future, or the business of the firm relates to a segment which is going very well. Okay, let's talk about the options first. The profit of the firm are enough to sustain its operations. There is nothing that you can find out which says it is enough. The owners of the firm are different than the firm. This is business entity concept where they say that business and the owner are two different points. The firm will be continuing in operation at least in the near future. The crux of the going concern is men may come and men may go, but the business is here to continue. So this means the firm will be continuing in operation at least in the near future. So the last is the business will firm will relate to any specific segment which is going well. This is not the point. So none of these makes a sense. There is only one point, that is C. The firm will be continuing in operation at least in the near future. Next point, match list 1 and list 2 and select the correct answer. List 1 and list 2. Measurement of income accrues to equity of owner, and then comes recognition of expense, recognition of revenue, then basis of realization, matching revenue with expenses and identification of revenue. That is for accounting period. What is the correct answer in this case? The options are these: A, B, C, D. That means first has A, second has B, third has C, fourth has D, or the B, A, C, D, or C, D, A, B, and C, D, B, A. So these are the options, everyone. Have a look at it. Now, measurement of income. Whenever we are, I'm sorry. Whenever we are recording the incomes, and we are recording it in such a way that, first of all, when we talk about the first one, measurement of income is basically measurement matching the revenue with expenses. Every year, whenever we are recording, we won't record future, we won't record past, we would record the present. So this is basically, this is the first one. First is related with C. Then comes recognition of expenses. When we are recognizing the expenses, that would be the recognition for an expenses should be recorded as per the accounting period. Accounting period is the period in which we are recording the things. That means we won't record past, we won't record future. We would record a specific period, and we will try to find out the profit and loss for that period itself. Then comes basis of realization, is basically recognition of revenue. Realization means the money that you are receiving. Now, when you will you record it? We'll record it in the form of which is accrued this year, which we have received this year. That is basis of realization. And the last is identification of revenue. When we talk about identification, it is something that is accrues to the equity of owner. So I think I'll say first is D, and first is, sorry, C. First is C, recognition was relating to D, then we had B, third is B, and fourth is A. So this is C, D, B, A. So this is the one. D matches with it. The answer is C, D, B, and A. Got the idea? Okay. Here comes the next question. It says, consider the following items: debentures, prepaid rent, interest accrued, or bank OD. Which of the following are current liabilities? When we talk about debentures, it's a long-term liability. Liabilities means the funds that we owe to others. Okay. Then we have prepaid rent. Prepaid rent is stated as an asset because we have paid in advance, so that makes it our asset. Then comes the interest accrued. Accrued interest is basically our money that someone else is supposed to pay to us. This is an asset, and that too a current asset. Both of these are current assets. Then last is bank overdraft. Bank overdraft means money which I overdraw from bank and I have to give it back to the bank in a short period. That is why this would be considered as a current liability. So the answer is 1, 3, 1, 2, 3, 4, all? No. Is it B, fourth? That's correct. Second, third, fourth, again no. And 1, 2, and 3 are definitely not there. These are these are either first, these two are current assets, the assets which materializes in less than 1 year. And debentures means the money that is basically something that we have to pay within the time span of next 1 year. The answer is 4. The main objective of accounting standards is to prepare the accounting reports which is easily understood by a common man, to comply with legal formalities, to harmonize the diversified accounting practices, or to comply with the requirements of the international accounting standards. Basically, the accounting standards were prepared to have uniformity internationally. That means we are going to have our Indian accounting standards in the same way as the international ones. Internationally, IFRS are used, that is International Financial Reporting Standards. In our country, we are using Ind AS. Okay, so we are going to maintain this uniformity in terms of IFRS and Ind AS. Now, Ind AS is in uniformity with IFRS only. So that is why we can say the to comply with the requirements of international accounting standards. Okay? That is IFRS. To comply with the requirements of the international accounting standards. Earlier we had AS. Then in order to comply with the international one and to meet up in the same level, we prepared Ind AS. Here comes the next question. Which of the following statements are correct? Inventory includes raw material, finished goods, WIP. Inventory means the goods we are keeping to sell. That means that includes raw material, finished goods, and WIP. Inventory is a part of working capital, and inventory includes goods likely to be purchased. So codes are 1, 2, and 3, 2 and 3, first and third, or 1 and 2. Which one is correct? When we talk about inventory now, it includes all of these. Answer is all of these. Inventory includes raw material, it includes finished goods, it includes WIP, it also includes stores and spares. In a few books, they cover stores and spares, and yes, in our book, they do. So we'll include this, and it is a part of working capital. Again, working capital means the money that we need on a daily basis to use. For example, I have to pay to the sweepers, I have to pay to the repair person, I have to pay to the delivery man, right? So we have to pay to a lot of people. Every now and then, these payments are to be made. Otherwise, these people will run away, and we will not have any option in terms of the domestic help that we are looking forward to. Then, inventory is a part of working capital. Uh, yes, it is a part of working capital because it is a part of current assets. And the formula for working capital means the money you need on a daily basis. I need electricity. I need this area to be clean. I need the laptop in such a way that all the electricity things should be going on. Wi-Fi should be connected. Wi-Fi bill has to be paid. Phone bill has to be paid. That is a part of my regular working capital. If I look at my current assets minus current liabilities, or the formula is this is net, and if only gross total current assets are found, that is gross working capital. That means when you are considering only and only the current assets, it's called gross working capital, and this is CA minus CL. Okay, let's talk about the working capital in detail. I am running my business. I have to pay salary. I have to pay electricity expense. I have to pay the expenses relating to the regular running of the business. I have to pay salaries to the people. Every now and then, my creditors are standing on my head. Where's my money? And then I have to pay to the delivery persons. I have to pay to the cleaners. I have to pay for the water maintenance. Right? So all those things has to be paid. So these are my current. You can say there are liabilities. That's a burden on my head. I have to pay. That is current liability. And assets are the things from which we can get money within a period of 1 year. Debtors are the people. There are many other people through which we can earn prepaid rent. I've paid something in advance. Nobody can throw me out. So those things are to be considered. In this case, the correct answer would be all of these are correct. Okay. Then the answer is 1, 2, and 3. Chaliye. Then comes the next question. Match the items in the column 1 with the column 2. Column 1 says materiality concept, going concern concept, historical cost, and consistency. We have got all four concepts. You have to match them, and these are your options. 4, 2, 3, 1, 1, 2, 3, 4, then 2, 3, 4, 1, and 4, 2, 1, 3. Now let's move back and do them individually. When we look at materiality, record only thing which is very, very important. The same accounting method used by the firm from one period to another. Same thing used over the period of time is D. Okay, now I know D is 1. So in this case, what would be the answer? If D is 1, then D1, I have two options. There's A and C. Then we have going concern concept. That means men may come and men may go, but in the foreseeable future, the business is going to be there. An inappropriate assumption of a firm being bankrupt. I think that would be B. So D is 1 and B is 2. So I think that makes A more near to the correct answer. And comes next point, historical cost concept. A normal basis used for assets or relates to the importance. This is materiality. A is 4. Materiality means which is more important. And a normal basis used for accounting assets. Normal basis is your going concern. Historical concept. DBCA. That means I can say 4, 2, A, B done. C is 3, 4, 2, 3, 1. Answer is A. Only A matches it. So this is the answer. Next question. How does the lower of cost or market value apply in inventory valuation? Always values inventory at lower of cost or market. Values inventory at cost unless the market value is higher. Values the inventory at market unless the cost is higher, or ignores market value when the value while when valuing inventory. AS2 states that whenever we are recording our inventory, always record either at the price at which you have bought it, that is cost, or if I sell it in the market today, what will I fetch? For example, I bought the raw material for 400 rupees per kg. I found this good. And then I came to know for some reason this particular raw material has lost its value in the market. Due to which now the cost of it, if I go and try to sell it today or buy today, it would cost me barely rupees 200 per kg. So I have made a loss of 200. So they say record it at 200. Cost or net realizable value, whichever is, answer is whichever is less. This is the formula. So the answer is value inventory at the market unless the cost is higher. Cost or net realizable value, whichever is higher, is to be considered. Okay, everyone, this is it for the day. Morning, everyone. Welcome to Officer 24/7. My name is Niharika Walia Bhatnagar, and I am with you with the area of JAIIB. Today, we are going to talk about accounting and financial management for bankers. So, continuing with the series further, I am continuing with the area of basics of this particular topic, basic accountancy procedure. That means we are starting the accountancy from scratch in this series. So I hope this has been useful. If it has been, then please go ahead and like this particular class. Along with this, go ahead and check out the entire playlist. I think good number of classes already been added, so this would be really helpful. Save the playlist for your examination as well, so that you can review all these questions just before the examination as well. I strongly believe when we are preparing for the examination, we are not preparing for the entire process. We are preparing what are we going to study on the last day. Because it's weird, but that the entire journey is important. That means for the examination, the entire journey of preparation is important, but last day is super important. Whatever you revise on the last day has an impact on you even at the time of examination. So one of the basic things that I strongly believe in is what are you going to do on the last day should be pre-decided. What are you going to do in your last week should be pre-decided, and that is something that you should start as early as possible with clarity. This is what I'm going to do, this is how I'm going to start with it. Those basic things should be taken care of. So here comes the first question. What is the purpose of the statement of changes in equity? To show the company's sources of revenue, to explain the reasons for changes in the company's equity accounts, to report the company's cash flows, or to disclose the changes in the company's long-term debt. According to you, what would be the answer? What is the purpose of the accounting statement of changes in equity? Actually, this is a little higher level question. This is what we'll be discussing in terms of module B though, but somehow I added it by mistake. Let's talk about it. Equity is basically the owner's capital. Okay? If I am the owner, this is my capital, which is termed as equity in terms of companies. So, what does it say? To show the company's sources of revenue, to explain the reasons for changes in the company's equity accounts, or to report the company's cash flows, or to disclose changes in the company's long term debt. What does it include? Okay, what is the purpose of the changes in equity? It is just to tell you who are the people who are there in the shareholding, and if there is any change in it, what is the level of change. That is to explain the reasons for changes in the company's equity accounts. That means if the number of shareholders are changing, at what particular pace are these people changing, and if they are changing very frequently, why are they changing? Again, an important point. Na? If the number of people are changing, why is this change happening? Then here comes the next question, everyone. XYZ Corporation is a manufacturing company that produces electronic devices. The company follows generally accepted accounting principles in preparing its financial statements. Okay, this is actually a case study, everyone. In this case study, I'm discussing the area of one particular organization using the generally accepted accounting principles. Matlab, whatever the accounting principles are that we discussed in the second unit of our book, IIBF book, that is something we are going to continue here. Acha. The first question says the XYZ corporation purchased raw material on credit. They have purchased goods on credit. And then, according to the principle of accounting, how should this transaction be recorded? Debit raw material, credit accounts payable, debit cash, credit raw material, debit accounts payable, credit raw material, debit raw material expense, and credit cash. What should we do? XYZ Corporation purchased raw materials on credit. मतलब if I'm buying goods on credit, that means I am getting goods, है ना? In this case, I am getting goods. Goods means I am getting stock. In this case, we do not use the term, just the basic, everyone. What am I getting and what am I losing? The basic point is I am getting raw material and I have to remember the name of the person to whom I have to make the payment, because if I don't remember their name, then it would be a trouble. So basically, I'm going to record the raw material and the credit the accounts payable, the person to whom I owe the money. In terms of a transaction, now you will always find the crux of every transaction is whatever you are getting, whatever it is, whatever you get is on the debit side, whatever you give is on the credit side. In Hindi, we have always been saying jo aaya wo debit, jo gaya wo credit. So whatever you are getting is debit side and whatever you are giving is on the credit side. Okay, this particular rule is almost applicable in everything. This is basically a desi rule. uh, as such, the sophisticated rules are created by Britishers as well as Americans. That is something which you will find, but the crux of this entire rule is this only. You will see its applicability once I move towards the area of journals, so you'll understand what exactly I'm talking about. Acha. The answer is that whatever you are getting raw material, and whatever is going out, you are not losing money. Technically, you would be losing money when you are making the payment. But in this case, you will record ki, array, I have to pay to someone. If you have to pay to someone, you will have to record their name. Isn't it? So when it's about recording their name, it would be recorded on the debit side and the credit side because it's a liability. But the basic way of remembering liability is a burden which puts us down. So anything that puts us down is called a liability. Chaliye, then let's move on and talk about the second question. The second question says the financial statements of XYZ Corporation are prepared based on the accrual basis of accounting. What does this imply for recognizing revenue? The organization is using accrual basis. I think we did it in the class recently, right? Accrual basis. Accrual basis means, everybody, what do you mean by the term accrual? Any ideas? Accrual means, the term accrual means that the things are to be recorded on due basis. One is cash basis, the other one is due basis. Due basis means whenever the things are happening, even when the money is not paid yet, you will record it. When it would be paid, it would be recorded accordingly. But when we talk about due basis, due basis means when it is uh, still yet to be paid, even then we are recording it. It's correct even. Acha, think about it. Why isn't it not correct? Basically, na, I bought I bought some goods. I have just bought some goods. As soon as I've bought the goods there, then I am supposed to pay to someone. The point is, I don't remember their name. If I don't remember their name, I won't pay them. And if there is nothing in the books of accounts, they will come to me and they'll sue me that you were supposed to pay, but you didn't. I said, there are so many people to whom I have to pay. How will I remember your name? They said, simple. Why aren't you using accounting? In terms of accounting, if you have to pay someone, note their names. If you have to receive from someone, note their names. So due basis says when you are yet to pay to someone, you should record their names, because if you know their names only, then it would be beneficial. That's the crux. So in this case, recognize revenue when cash is received, recognize revenue when the cash is earned, recognize revenue when it is when the invoice is issued, or recognize revenue when the product is shipped. Amazon will record that we have bought the goods as soon as the invoice is issued in our names, isn't it? The first thing is recognize the revenue when the invoice is issued. Achha. In this case, it is recognize revenue when it is earned. Nahi, it is better. It is earned when the invoice is issued. It is the moment where you actually earn it. So the broader term is when it is earned. It's not only required when it talks about, when we practically talk about the earnings only, the bill only, but it will also talk about the broader point that you, whenever you are due to get money na, you will record it. ठीक है ना? So technically this is the correct answer. चलिए, then considering the point, this is it. Let's look at this. The next question that comes here is XYZ Corporation estimates the depreciation on its machinery using the straight line method. Straight line method says the same depreciation is charged every single year. There is no variation. 10,000 means 10,000. 20,000 means 20,000 till the end of the life of the asset. Which accounting assumption does this align with? This is given in the IIBF book itself as an example. What will it be? Monetary unit assumption, then going concern assumption, then time period assumption, and matching principal assumption. Okay, if I look at the particular question, and the answer to this question would be what exactly? Let's talk about it. When we talk about depreciation, monetary unit concept basically talks about anything which can be quantified in terms of rupees should be shown. Going concern concept says men may come and men may go, but the company is here in the near future. Time period, there is nothing called time period there. They have accounting period concept which is based upon recording things on yearly basis. And then we have matching principle. Matching principle talks about uh, all the expenses and all the incomes belonging to a specific year should be recorded to that specific year only. So in this case, it is going concern concept. Men may come and men may go, but the organization is here to stay. So the answer is B. Acha, XYZ estimates the, nay, it is going concern. As per the IIBF book, this particular example was given in going concern assumption. Depreciation is charged because of going concern. So I'll be going with B only. So I'm changing the point there because the correct answer is B. Though A also applies, but this specific example is given in the book for going concern concept. So whenever there is a contradiction, it is always the book that wins. Okay, na? So the answer is B, everyone. Let's look at the next question. If XYZ Corporation receives an advance payment from a customer for goods to be delivered next month, how should the company initially record this transaction? Debit the unearned revenue, sales, cash and unearned revenue, sales, cash and accounts receivable and credit revenue. Acha, I've received some advance from the customer. Matlab I've received advance and the goods haven't gone out. So technically, what am I getting, everyone? I think I'm getting cash. So one thing is sorted, that I'm getting cash. But the second point would be, if I'm getting cash, there is something that I have to give. I will have to give goods. So that means this is an advance that I'm receiving. So what am I getting? I'm getting cash. For what? Because of advances. So in this case, my answer would be B. Unearned revenue. Unearned means I haven't earned this money, isn't it? This money is something that I haven't earned at all, but I will record it because this money is something that we haven't earned yet. But this belongs to our business. In the next month, when the goods becomes due to be given to the person, then this will turn into revenue. Right now, it's a liability on my head. It's a burden. I have to deliver. Otherwise, I will not be able to recognize this revenue. Matlab, this is something that's a liability till the time I don't uh, pay what I have promised. Right? Okay, here comes the next point. It says, what is the key advantage of double entry system of in terms of record keeping? Time efficiency, complete record of business transactions, economic savings, or limited information recording. Double entry system of record keeping. Achha, double entry is basically noted as double entry bookkeeping. Bookkeeping is related to the area of maintaining the books of accounts. In this area, when they talk about this area, what does it do? Double entry bookkeeping is one of the best methods, but there are only two methods which are existing. One is double entry bookkeeping and one is single entry. Single entry is also known as income accounting for incomplete records. Matlab, it is not even considered that it completes its working. Only the other method completes itself. So in this case, what is it about? Time efficiency? Nope. Is it about complete record of business transactions? Correct. Economic savings? Nope. And then last is limited information of recording. No. Though in this case, the first point, the B point, complete record of transaction is done because I am recording whatever I'm getting and I am also recording whatever I'm giving. So both get and give is noted in this scenario. And everyone, the answer is B. Complete record of business transactions. Here comes the next point. Which principle is also known as the convention of prudence? Acha, what do you mean by prudence, everyone? Think of it. We have talked about this point in multiple questions already. Convention of neutrality, principle of consistency, then principle of conservatism or convention of reliability. If I have to be very honest, neutrality is not a convention. Reliability is also not a convention. It is consistency and conservatism. What do you mean by the conventions? Conventions means something which is accepted as a practice to be done. So this is as a practice, it is to be done. Then when we are recording it, then we will have to record the principle of conservatism. That is anticipate the, I think we have done it in multiple classes in different questions. So you should remember it by now by heart. Anticipate the losses but not profits. You know? So the answer is anticipate the losses but not profits. Done everyone? Next question. The answer is principle of conservatism. It talks about the fear of a businessman, pata hai? It says that he should be ready for all the losses. But when it comes to profits, he should not be anticipating them. Here comes the next question, everyone. What does principle of conservatism suggest regarding the recognition of revenue? You should recognize immediately, recognize them only when cash is realized or assets, or recognize them after a specific period, or ignore the recognition. You cannot ignore the recognition. You cannot record it after a specific period of time. You will forget it. If you'll forget it, there is no meaning. Recognize them immediately? No. Because right now, if you want to record it on the basis of something else, then there would be a problem. So in this case, the correct answer would be B. Recognize them only when the assets are in cash, or it is basically something that is proof that we are realizing it. Sorry. Done, everyone? Chaliye. Now let's continue further. Next question. What does the principle of conservatism suggest regarding the recognition of revenue? What does it suggest, everyone? Conservatism. When we talk about conservatism, acha nahi, we did this question. Na? It's just a repetition of the same. And now, okay. Chaliye. Now let's continue further. We did this part. So here comes the point. The point is, among the following, which is a capital expenditure? Capital expenditure, okay. Cost of employees' benefits arising directly from construction and acquisition, cost of site preparation, initial delivery and handling cost, or all of the above. पता है capital expenditure are those expenditure which relate to the area of assets. It relates to the building of an asset. It is relates to the making the asset ready to use. It helps in making the asset overall ready for the working. So in this case, the correct answer would be cost of employee benefits. Agreed, because whatever our employees are doing to make the asset ready, it has to be included. Then cost of site preparation, you have to prepare the site before use, then it has to be included as well. Then comes the next point as cost of site initial delivery and handling cost. Yes, it has to be recorded as this part as well. Okay, so in this case, when we talk about initial handling, this is also required. Without this, you cannot work further. So this is also to be included. Now the next point is all of the above. So since everything is satisfying the entire part, so I believe when we are recording it in the books of accounts, we should record all of the above, because everything is as per the uh, capital expenditure only. Capital expenditure is the expenditure we are making in order to make the business, make the things ready to for use overall for the business. Offices are 24/7. My name is Niharika Valia Bhatnagar, and I'm with you with the area of accounting and financial management for bankers for JIB May 2024. This is another video to the series. We have done a lot of MCQs on the area of basic accountancy procedures, and we are continuing with the same further. Slowly and steadily, I'll move towards the other topics because still we have just started. A lot of topics are there in this area. So let's start with the basics. Basic accountancy procedure. Which of the following will not be recorded in the books of accounts? The sale of goods, the payment of the salary,
quality of the staff, or purchase of goods. Always remember, when we talk about the books of accounts, it is something that will always and always record only, it will always record only monetary things. It will never record non-monetary. So in this case, whatever is non-monetary, it will not be recorded. That's the rule. Sale of goods is monetary. Payment of salary is monetary. Purchase of goods is again monetary. So answer is C, the quality of the staff. Which of the following will be treated as drawings? Withdrawing money for payment of salary to the employees, withdrawing money for payment to creditors, withdrawing money from business for private expenses, or withdrawing money for purchase of asset. When we are talking about which of the following will be treated as drawings? Okay, when we talk about drawings, drawings are personal expenses, everyone. Personal expenses means something that we are having for our personal reasons, we are doing something. So this case it would be private. This would be the answer. Withdrawing money for business, from business for private expenses. Basically, the salary to the employees, the creditors, these are all related to the business, right? Even the assets are also related to the business. There is only one point which is not, and that is the expenses that you are incurring for your private expenses. Or I can say these things are related to your personal expenses. And it is, drawings are related to the area of personal expenses. Next point. Which of the following transactions will not be recorded in the books of accounts? Purchased a LCD for personal use, then paying the amount from personal bank account, purchased machinery for manufacture, or purchased machine for resale, or paid salaries and wages. Purchase an LCD, purchase machinery. Now the point is we should not record anything which is not business based. This is business based because it is related to the manufacturing. This is a machinery which is purchased for resale, again a business based transaction, and paid salaries and wages, again a business based transaction. While LCD is purchased for the personal use. है ना? This is for the personal use. Purchased LCD for personal use, paying the amount from personal bank account. It is paid from a personal bank account. That's why it will not be recorded in the books of accounts. It would be recorded, but maybe in our personal accounts, not in the business books of accounts. Acha. At the same time, everyone, if you like this particular session, please go ahead and share it among your peers, because when you share it and like these particular sessions, it definitely boosts our motivation. So if you like these sessions and you find them useful, please don't forget to like it, right? I'm meeting you every day at 6:30 a.m. in the morning for our classes. So let's continue further, everyone. Next question. What is the purpose of the income statement? What is the purpose of income statement, everyone? Why do we prepare the income statement? It is to show the financial position of the business, or is it done to summarize the revenues and expenses, to record day-to-day transactions, or calculate the trial balance? When we talk about what is the purpose of income statement is prepared to write down the profit or loss of the organization. Now, profit or loss means we are going to record our profit of the business or loss of the business. Okay? So we'll be recording either the profit of the business or loss of the business on this basis. Okay. Then comes the next point. Summarize the books of accounts. It is recorded. Okay. Basically, it is done in this way only to record the profit and loss of the business. Then comes the next point. What is the need to bring the standardization in accounting principles? Why do we need to bring standardization? To bring consistency, to bring to ensure transparency, or to be comparable, or all of the above. Whenever we are bringing standardization, it is definitely brought to have uniformity and to make sure that all the organizations are working together to have a better situation, right? So in this case, the correct answer would be all of the above. It is just to make it uniform. Uniform means our present situation and our past situation as well. And along with this, we are also reviewing the fact that what is going to happen in our daily basis as well. Okay? Matlab, we are going to review what is happening in this year and what happened in last year. If we are not using the same methods and same standards, then these 2 years are not comparable. ठीक है ना? Then it would be not comparable. Done? Now let's look at the next point. Then, what does the historical records concept of accounting primarily involve? Historical cost concept can be seen as something historical records. We do not record anything as per the current situation. When we are recording things as per the current situation, then it would be very costly because every single day the market price of things changes. So we cannot record the regular market price. So the historical cost concept simply says that record everything that has happened at one point of time. That means you have your invoices, record them at their invoice price, record them at the price that is stated to us. That means recording future transactions, recording business transaction as they take place, ignoring the business transactions until the end of the year, or recording the transactions only when they generate profits. In this case, the correct answer would be B. That is, we are recording the things as soon as they take place. That means if the in the invoice we find it is written that the machinery costed us rupees 10 lakh, no matter what is the price today, we will record it at 10 lakh. Whatever depreciation because of its usage is charged, that's a different scenario. But the original value will not be changed. So for a simple reason that we purchase it for this price, right? So the answer is the historical records concept involve recording business transactions as and when they occur, date wise, leading to preparation of historical records. Now, the next point. What is the main idea behind the matching concept in accounting? Matching revenues with expenses of the same period, matching future transactions with current expenses, ignoring expenses in the financial statements, or recording transactions based on market values. What is the main idea, everyone, behind the matching concept? When we talk about the matching concept, it records all the expenses related to all the incomes. That means expenses and incomes related to one specific year. If we are recording the expenses for 2023, 2022, 23, so that is 1st of April 2022 to 31st of March 2023. So the incomes are also for the same year. That means we are going to record whatever expenses we are incurring to earn income in this particular year itself. So in this case, the correct answer is going to be matching the revenues and expenses of the same period. Normally, people think that matching concept would mean debit is equal to credit, which is wrong. Debit is equal to credit is basically the double entry bookkeeping. This is as per double entry bookkeeping, which states that whenever we do something, we have it from the two aspects, that is, from the debit aspect as well as credit aspect. Now, what does the accounting period concept assume about the duration of a business? The business will cease to operate soon, the business will continue, the business will run for a long period, or business will only operate seasonally. This is never an ideology. If you will see that the business runs seasonally, then you would never want to invest in this business. The business will continue for an infinite period. The point is, how do we know that the thing will never end? There is an end to everything. So the business cannot run for infinity. So, but we believe that in the foreseeable future, the business is not dying. That is going concern everyone. We do not eradicate the fact that after a certain period of time, the business can definitely die, right? We are going to agree to that fact, but we will continue for, and in that we will still assume that the business will continue for a for an infinite period is not the point, but we'll assume that it will work for a long period. This point, that is, the business will run for a long period. Reasoning, the accounting period concept assumes that the business will run for a long period and accounts of each period are recorded. Basically, what we do is we divide the entire life of the organization into separate year 1, 2, 3, 4, 5, 6. So, all these years are defined, in every single year you receive certain amount of money. That is what we cover in this area. Okay. Then, which convention ensures that all material information is honestly disclosed in accounting records? Convention of consistency, convention of full disclosure, convention of materiality, or convention of conservatism? Convention ensures that all material information, we are saying that whatever important information is, we are not saying all the information, but we are clearly stating all material information has to be stated. That is consistency, full disclosure, materiality, or conservatism. In this case, the correct answer would be convention of materiality. Materiality is stated as important. All the vital information is stated as per materiality only, everyone. Okay? This is the all material information. Nahi. When we talk about all material information, it is materiality. All the information regarding accounting policies and everything, then we will talk about full disclosure, because full disclosure talks about everything. Acha, now the point is there is one more point as well. This question has a little contradiction there. Secret reserves. Only banks can keep secret reserves. Banks are allowed. Rest everybody else is not. That's the rule. And what are conventions? Conventions are practices that are followed in the market. Okay. Next question. This question is regarding single entry bookkeeping. Single entry is non scientific, or I would say this is one sided or incomplete recording. Which of the following statement is true? Its limitations and characteristics. The system is scientific and widely used in large business houses. It records both aspects of every transaction. Under the system, only personal accounts are maintained, leading to incomplete and unsystematic records. So the single entry system is suitable for detailed profit. Those points are terribly wrong. Why? Because single entry system is such a system where the books of incomplete records are maintained. The accounts are not completely recorded. When the accounts are not completely recorded, they have a problem. So in this case, when they would be recording it, it would be recorded on the basis of they would be recorded on the basis of uh, single entry in this case. Okay. case, they are stating that the single entry is, it is also called recording of it is basically counting of incomplete records or single entry system, or it is also called incomplete. We also call it uh, pure entry system as well. In this case, they do not record all types of transactions too. They record only a certain types of transactions. Matlab, it is not something I can say which is reliable. Done? Chaliye. Then let's continue further. Next question, everyone. The next question talks about the area of in context with dual aspect analysis of the double entry system, which is it considered a scientific approach in accounting. What would you call a scientific approach in accounting, everyone? Scientific approach, it emphasizes ignoring one aspect of transaction. The system records only the giving transaction. Dual aspect analysis, that every transaction has two aspects and the system focuses on personal accounts only. See, if I look at the scientific method, it is always and always dual aspect. Whenever we get something, we have to give something for the same as well. If I buy a car, then I have to give money. If I buy a pack of chips, I need to give money. If I buy even a pencil, I have to give money. That's the rule. So, dual aspect principle basically talks about recording things on debit is equal to credit basis. Okay? Chaliye, let's continue further. While looking at any account in double entry system, why the left hand is shown as debit side? It denotes the personal accounts. It represents the giving of transactions. The debit is written on the left hand top corner, or right hand is reserved for both credit transactions. One of the simple things about JIB regarding this examination, when we talk about accountancy, one particular thing is absolutely clear. One thing is that when we talk about double entry, everyone, under this, debit side is always given towards the we record it on the upper side. We write it on the top left side, whatever it would be. For example, dash account should be debited. Whatever it is given to dash account. So in this case, whatever portion is debit, it would be written here, and the account which would be created would be denoted here. We do not specify the term credit, we just specify the term debit. This is not something where I can ask you why, but yes, I can tell you that this is as per the format. For example, when we were kids, do you remember to write the tables? It was 2 into 1s are 2, 2 into 2 are 4. So when we are defining this, how are we defining? This is one side, this is the other side. In the same case, accounting follows these kind of formats, and these formats are compulsory to use. Okay, so the correct answer is the debit is written on the left hand top corner and it is denoted by DR. Basically, it is said that it is taken from the Italian term debere. That's why DR and credere, which is called CR. And everyone, chalo. Then let's end the session here itself. We'll be meeting tomorrow. But before I end my session, I hope you have reviewed our courses yet. If you haven't, then kindly check out our website, that is www.adda247.com. One of the best thing is don't look at the website. It is way better that you open it up in your phone. If you try to do that, then you'll be able to get another 1% discount as well. Currently, we are having sale, so that means you can get 81% of discount and double validity. What you need to do is go on to the area of JIB and CIB. Check out the area of JIB and CIB Mahapack. You can see it is available at double validity. A win-win situation at this point of time. All you need to do is You can buy both JIB as well as CIB. You can have 1100 hours of online classes, 548 test series, 580 ebooks, 1782 videos, bilingual and English medium both available, recorded and live videos both available, test series and ebooks both available, 10 plus hours of mini marathon, 5 plus hours of mega marathon, practice paper as well as doubt session days. Everything that we said is covered in our classes. So if you're looking forward to it, then you should make a firm decision and look forward to it, because the journey to your studies is definitely getting difficult, but success and failure depends upon your consistency. So all you need to do is click on the area of buy now, use the code Y541. So in this case, the answer will come out to be, the amount will come out to be 10,499. That means after 81% discount, if you then you will have another 100 rupee deduction minimum, because we are giving that 1% discount to everyone who has downloaded the app. So kindly download the app and buy the course and watch anywhere that you want to. So let's meet up at 6:30 tomorrow, everyone. Thank you.